Welcome. My name is Len Lane, and I am the founder and president of Brokers for Life, Inc., and we are Dominion Lending Centers in Western Canada. The topic of our podcast will be about what we consider to be real-life mortgage solutions. So, welcome back. We are here today to talk about probably one of the biggest events that's going to happen in this decade as far as the mortgage industry goes. From 2025 through to 2027, we're going to see nearly $1 trillion worth of mortgages come up for renewal. We always hear the stat that that's 60%. Well, 3 years out of our 5-year terms, it is 60% regardless. But this time round, it's some big numbers, and we're already seeing the effect of it. I personally don't chase business, but I've already done my 7th file this year, and I'm on my reward out already. So my guest today is Shawn Jewers. He has been in our industry in a few different facets over the last 20-some years, looks like, starting out with CMHC as a BDM, and today he is here as the business development manager for MCAP Mortgages. They are a Vancouver-based, Toronto-based lender that we do a lot of business with. So, Shawn, welcome to the podcast.
Well, I appreciate it, Len. I really enjoy getting the invite to do this. We've been working together for, I think it's been 14 years. And it's been amazing to see how you've grown Brokers for Life and the brokerage in your own business. So your reputation precedes you, and I'm really excited to get this going today. But you're right. I think there's nearly 1 million Canadian borrowers renewing just in 2025. It's a staggering number.
It is. And, there's a crazy stat out there that says 85% of Canadians auto-renew their mortgage without ever checking to see if there's a better rate or better option for them for their next 5-year plan or whatever, how many years they plan to have a mortgage, I guess. So let's talk about what exactly switches are and the different types of switches.
Yeah, there's going to be, like we've said, a tremendous amount of opportunity for mortgage brokers to give some good advice. So I think understanding the marketplace and having great communication skills and the ability to talk to your homeowners is going to be a key to winning more business. And the first part is understanding that there are 2 types of transfers. So there's the standard transfer. It's an existing registered mortgage, and its assignment gets switched to, let's say in this case, MCAP, without changing many of the terms. Whereas a collateral, it's a little different. The existing mortgage is discharged and they're replaced with an MCAP mortgage. So knowing how to identify the 2 differences is probably the best starting point. And it's actually one of the questions I get most often is, how do I tell if it's a standard or a collateral? So my 2 bits has always been pull registration, check out Form B, and then usually on page 2, you can see that there's some questions on there. And if the question is, if this is a running account, odds are it's a collateral mortgage. If there are specific mortgage details, like the terms, the amortization, then that's a good indication that this is a standard transfer or a standard registered. So that's how you can kind of start that process off.
Right. And one of the things we always teach in with switches, first off, don't be cheap and go spend the $10 on the title. Then spend another $10 on actually getting the registered documents on that title. That term standard mortgage, I love to see that one. That's a simple one. But a couple of other words that show up in those, of course, are on demand, right? Once the mortgage is on demand, it most likely has a portion or is set up as a collateral.
100%. Yeah, the other key term that you see sometimes is C schedule in the absence of mortgage details. So, yeah, those are some of the key things you want to pick up on those titles.
Yeah, definitely. A simple process when it's a straight switch. Obviously, they seem to take very little time. It got to be a little more in depth when it comes to collateral switches. Obviously, First Canadian Title, who will be talking with you on to the team on tomorrow, has a big part to play in it. And what is that connection that MCAP and FCT have that is working so well?
It's a great relationship we have. In Western Canada, MCAP uses FCT for both our transfers and refinances. And out east, the team uses F&F. So they do a great job of facilitating the legal aspects of the transfer. and meeting with clients, or in some cases, virtually meeting with the clients to sign those documents to get the title transferred over and make the changes.
Right. And that's one of the things that I think, obviously, straight switches, no cost to the client. It's absorbed by yourselves. And it's either done at their kitchen table, or like you said, now we're seeing more and more virtual ones if the clients are hard to track down for a schedule. And of course, B, with the collateral switches, there's a little different process to it. Maybe talk a little bit about how that all happens as well.
Yeah, the collateral transfer process does take a little bit longer, simply because we're re-registering how the mortgage is registered. So we're changing the terms. So the process does take a little bit longer. We've got a great partnership with FCT. So we've got some distinct advantages with the collateral transfer program. We do allow for the virtual signing like we talked about, but we've made a recent change, and something we're doing exclusively with FCT is, before the payout statement is ordered, because that's usually the delay in the process, we can actually have our documents sent to FCT and have the client sign with FCT before we get the payout statement. So on the collateral transfer, we do allow for a little bit of a buffer, and then that way we can get the signing done and then get that payout statement. So if there's any surprises on the payout statement as far as dollars are concerned, we've built that buffer in, but we've already sped up the process by signing with the client. So that's a key difference with us.
Yeah, excellent point there as well. I learned about something this morning as well with FCT called Easy Close. Have you heard of that?
I haven't, actually. Depends on what their program is. Like, I think with each lender, they have different programs. So we use their Platinum service.
Right. And this is an exclusive program with DLC. We have access to something called the Easy Close. They sent me the brochure for it as well. I had no idea it was there. And everybody should know about it, because we can actually go ahead and ask them for the payouts before we have the commitment and everything else done as well. So we can start the process faster because we're part of Dominion Lending. That speeds up having that payout statement in hand, because we know how some of the lenders are about getting that out to us. In the case of one of the big banks, 2 days before closing, so it can cause a little panic at that point, right? So.
Yeah, definitely. And FCT's got a lot of really good programs or tools to use. Making sure you get signed up for their portal is always one of my first tips for new brokers and existing brokers. But being able to follow your milestones as you go through the transfer process is fantastic. So making sure everyone signs into their portal and then following those milestones can help you communicate much better with your client, and then understanding where the process is with the lender.
Right. And I always give them a hard time because it's a lot of emails. I want less email. Someone submits under my name. I end up getting all of their emails as well for that. It's great that it's tracked like that. You kind of have a heads up, and or if there's issues, they actually let us know as well to take care of that as well. So
it's always good for the client to expect communication from FCT. I know they send 2 emails to start, and then they do follow up with a phone call. So it's great to advise the clients to make sure that they know that those calls and those emails are coming, because sometimes that can slow down the process a little bit. If they're not anticipating that communication, they may ignore the call or not pick up the email, or pick up the call or ignore the email. And that does slow down the process a little bit.
It does. And it's funny because I started one. Obviously, we're going to have a lot of these this year, probably. I'm just cutting and pasting what FCT is asking, and they're usually, one of them is they ask that the client be aware that there is an email coming. They'll be able to load up the documents for payout and stuff like that, to be in advance of it, to keep things moving forward. So the faster they do that, the faster that the turnaround can happen. So
yeah, and I'm really loving the new virtual signing. Although I have learned virtual signing isn't for everyone. So I thought I would share a couple tips that it will help brokers identify who might be a good fit for that virtual closing.
Right.
Because everyone needs their own, like, valid ID. I mean, that's obvious. But each person also has to have their own email address. And sometimes a household may only have one email address. So it's always good to make sure that they both have those individual email addresses, because that's where those communications go to. And then it seems simple, but it's not for everyone. Being able to use your phone and take pictures, and take good pictures with your phone, because you do have to take pictures of your ID and so forth. So technology is not everyone's bag, but if you do have people that are tech savvy, that virtual closing might be a real advantage to speeding up the process.
Yeah, well, my generation's been taking pictures of grandkids for the last decade, so we should be able to upload those into the system. That's I was laughing about that. I'm going like, yeah, you sent pictures of your grandkids the other day. Just do the same thing except load it here. So, speaking of the older generation, grandfathering. What exactly is that, and how does this apply to our switches?
Yeah, so grandfathering. We know with insured mortgage right now, with the recent changes, everyone knows they can qualify on contract rate. So that was a change. The uninsured space is a little bit different. I think everyone's trying to digest what that's going to look like. But when we look at grandfathering, we're talking about insurable mortgages, making sure they fit into that insurable tranche. And it's just about key dates. So if you have a mortgage funded prior to November 30th, 2016, you can use the contract rate on the switch as opposed to contract plus 2. So I think that's the key note, is to know when the mortgage was originally funded. All other terms, if it isn't a 5-year term, is contract plus 2, the minimum qualifying rate.
Right, and I think having a more mature team, as I do, that will come into play for a lot of them, because I know that I just 2 this week, and they're on their 3rd term with me, right? So pre 2016, they had some huge years in there, so we're gonna possibly see a lot of that and take advantage of that as it goes through. So
I just had a case this week. I get a chance to talk to a lot of brokers, and they had called they had some issues with ratios. They couldn't get the deal to work. And it was a newer broker, but I think it applies to a lot of people, is forgetting about that date, the 2016, being able to grandfather the qualifying rate. Their ratios were over. And we just went back to the application, and we noticed they qualified at contract plus 2, did a little digging. Turns out it was done before that date. This is the difference in payments. So the mortgage was about $350K. They were trying to qualify at contract plus 2, so it was $639 at the time. The payment came in at $2,321. Rolling it back to grandfathering, they can qualify at $439, and the payment was only $1,915. Save $400 a month. So I know we say you can use grandfathering rules, but when I saw that example, I'm like, oh, dollars and cents, like that makes a huge difference. So I think that's a really good thing to take away, is math is important. And when we're talking about that big of savings, it makes a huge difference on getting more deals done.
Math is our life, to tell you the truth.
Yeah.
We do this and this and this, right? So to make that all work in one place would be great. So we see this occasionally. People in there renewing their mortgages. Possibly they had a spouse or a mother or father maybe on the mortgage with them, and now they're able to qualify on their own. How does that work? In our language, of course, it's called a covenant change. What are we able to do with that when there's a switch or transfer?
Yeah. So again, we'll go back to the 2 types of transfers, whether it's a standard transfer or a collateral transfer. Under a standard transfer, any covenant changes should be made with their existing lender before you make the transfer. Where we can really make those changes, and I think in the scenario you're talking about, is under the collateral transfer program. In that case, you can make covenant changes, such as adding or removing any individual. Well, not any individuals, I shouldn't say any, but we're talking about spouses, parents, and siblings. That you can make that change while using the collateral transfer program.
Right. So that saves a step if they do it in advance, of course, right? If they can. People, Some lenders do want to hang on very dearly to that covenant and having the extra possibility of someone having to pay the mortgage should something go wrong. But in many cases, it is as simple as going to the branch possibly or contacting through the portals the lender to see what is needed at least to make that covenant change. So
yeah, and under the two programs, there are differences in the fees that are covered under the two different programs, under standard and collateral. Under the collateral program, MCAP does allow for you to choose whether you want the FCT fee paid for or have the client pay it. If the client pays, it can be capped into the mortgage. The thing to note with the covenant changes is there may be additional charges. So that falls outside of that perspective, and FCT may have additional charges. So you always want to make sure the client knows that may be coming.
Right. So it just adds that extra level of documentation that the FCT, or I guess even if you went to a lawyer, they would still have to be an extra charge to do that because that's just more paper and it involves the title, of course. So your boots on the grounds for MCAP, are they projecting that the growth this year will be substantial in the amount of movement within the mortgage industry, among mortgages itself?
Well, I'll speak on my behalf. I shouldn't and can't speak on MCAP's behalf, because I'm not an economist, but it is. With the amount of mortgages coming due, I think it's something like 55% of all mortgages renewing or are renewing in the next 2 years. So I think we can anticipate this being a major aspect of all lenders' book of businesses. And then, of course, the focus for brokers is getting to be very good at transfers because the opportunity is huge. Even, I think it's over the next 3 years, 85% of mortgages come due. So I know hunting is a big part of being a broker, but having a great database management system in place is key. So yeah, I personally think this is going to be a big part of the business.
Yeah, I have to agree. We've got, they've forgotten what our number is on the book. We have something like over almost $5 billion worth of mortgages in the book overall. Vast majority of that maturing and once again, in some cases, but it's definitely going to be something that I think every broker should know. Doesn't mean they all will, but you should have that as front of your mind and paste it on your wall by your computer or something about all the different possibilities, right? So you can advise those clients correctly every time. So it's great to have you on today. We won't keep you too long. I know you're a busy guy. So any other words of wisdoms for the brokers listening in?
Yeah. We've talked a lot about knowledge and knowing where to find information. MCAP has done an incredible job building out our Professor, the online portal for mortgage brokers. Under the resource tab, just about everything I've covered today or we've talked about today, you can find it on the products and programs tab. In there's an entire section on transfers. So I sometimes say I think they're trying to replace BDMs by building such a great tool. But the truth of the matter is, like you said, boots on the ground. I'm in meetings. Your BDMs are busy. You're going to want that information quickly. So being able to log into Professor, go into the resource tab. In that transfer group, there's both our switch programs, both the standard and the collateral switch program. But we also have the FCT guide. So you can check out the FCT guide and how their process works. The gold in that whole thing is our transfer matrix. Even if it isn't an MCAP mortgage, I'm going to assume every transfer is an MCAP transfer, but our transfer matrix is a great guide to use. It covers grandfathering, covenant changes. It really gives you a great overview of the transfer world. So I would stick that on your desktop as a go-to for information. And then we also got an awesome video. It's a 2 or 3 minute video that incorporates the grandfathering and the B20 guidelines. So lots of great stuff in there. Personally, I've got a switch transfer template. So if a broker ever wants to use a template for transfers, I know a lot of people use them for their underwriters. I did this one based on your client interview. So as you go through your interview with your client, this template kind of keys certain questions, things like getting the current insurer mortgage number. checking title, make sure there's not multiple registrations on title. So it's a great tip sheet that I built. If you want to get it, please contact me. We also have a debt analyst calculator. Easy for some people to say, not me apparently. But refinances within transfers, with our Fusion product, you can do a transfer and get that line of credit with it without it being a refinance. So we've got a great tool that you can use to work backwards on how to refinance a mortgage without it being a refinance. So it's a free refi tool. So if you want access to that, and I'll always say, reach out to your BDMs and your underwriters. BDMs were really important, but the true relationship is with your underwriters. So always feel free to reach out to your underwriter and discuss the deal with them. And then, of course, MCAP, we have quarterly webinars. So go ahead and join us on one of our webinars. And Len, you do a great job hosting team meetings. So BDM meetings are always really good.
Excellent. Yeah, I know you're on the portal, and that's where I kind of started to look at that. I'm going like, I think there's 7 or 8 sections or envelopes in there, whatever you want to call them, right? That are on different things, not only FCT, but FNF, of course, in the East, and being licensed in 6 provinces. We're still starting to see more business out of Ontario, strangely enough, but a couple of agents are actually moved back there. So that's starting to show some promise down that way as well. Well, that's great to have you here today, Shawn. We thank you for your time. It's going to be a very busy year, I think, all the way around, and we're looking forward to the partnership that we have with MCAP, and hoping 2025 will bump us up into those other numbers. So.
Thanks for your invite, Len. I really appreciate it. Like I said, your reputation precedes you, and things like this podcast are a great way that you're showing you're giving back to the industry, and I think you're leaving the industry a better place than when we both started. So thank you.
Thanks for listening today. I hope you found the information that we provided to be useful in your mortgage journey. And remember, you can always find our associates at www.brokersforlife.ca/associates. Have a great day.